growth in this global economy.
So who's right, and how should you be positioning your portfolio? Well, joining us now is Dan Genter, President of RNC Genter Capital Management, and Harry Rady, CEO of Rady Asset Management. Dan, will the economy come back in the second half, and will it bring the stock market with it?
Well, Mandy, I think what you're going to see is that it is going to come back in the second half, but it's going to be very slow. And I think we were just a little spoiled by the first quarter. We rode the back of very, very strong earnings in the first quarter. They were expected to be 14–15%, came in at 20%. And frankly, we just came screaming down the freeway powered by that, and we missed the corner, and now we're off in the dirt trying to get some traction. So it's going to all be based upon what we see in Q2 and Q3, but that's probably going to be light, 2 to 3% increases. But I think that'll lead us into a stronger Q4. And probably the saving grace here is we're still trading at about a 13.3 PE. So we're undervalued. We probably have a good support net somewhere about 12.50. And I think as we begin to follow those earnings into primarily third and fourth quarter, we can still see 1,400 on the S&P by the end of the year, but it's going to be back-end loaded, and dividend and cash is going to be king.
All right, Harry Rady, look at we've had a 6% correction. Stocks are up today. I want to put that factoid in, 89 or 90 points. Look, it's up 91.5 points. As I ask this question of you, my friend, is the correction over? Is everybody just too bearish? Is the cyclical stocks the place to be? They're the ones running up the market today. Maybe it's time to say the correction is 80% over and it's time to get back in. What are you thinking here, buddy?
You know, I think you're right on point, Larry.
Whoa.
I think that, yeah, as usual,
Whoa.
and good-looking and smart.
I love you, Harry. Please continue.
Yeah, I love you too. All right, so we expect lots of volatility. I mean, the macro backdrop is really ugly. That said, corporate profits continue to deliver. So, opportunity is created by volatility. And as a tactical long-short manager, this plays right into our wheelhouse.
Harry, you say that corporate profits continue to deliver, but you've got oil back on the rise, you've got an economy that's slowing down. Won't earnings estimates have to come down?
Voice of gloom.
Doom
and gloom.
No, the other side of the coin voice.
Doom and gloom.
In some cases it does, but in the context of a long-short manager, it's our job to identify companies that are overcooked on the upside and overcooked on the downside. And so, the way to play the macro uncertainty and the over-leveraged balance sheet of the Fed is to buy the TBT. So we're looking for opportunity. We're not going to spend our day, saying, woe is me. So TBT is the way to pay the macro backdrop.
Dan Genter, just get your picks here, because one point I want to make, one factoid. Corporations are so full of cash. Cash, 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 and they've delevered massively. Now, where do you invest to take advantage of that massive cash?
Well, Larry, I think you're absolutely right. And, money talks and cash screams. And that's what I think we're going to see as we go through the second half of the year. And you're going to see a tremendous amount of M&A activity. You're going to see buyback activity. And you're going to see shareholder enhancement through much higher dividend payouts. And investors are asking for that. They're demanding it, frankly. So I think as you look at those companies that are going to have that kind of cash flow and are trading at reasonable values, number one, you have to stay with technology. I mean, we're at the beginning of the replacement cycle. Capital spending is still very good. Very clear that companies are going to replace versus hiring new labor, they're going to use technology. So I think even though it's more of an advertising company, I think Google right now is just very, very cheap. At 15 times, they're going to see 20% growth. Not much of a dividend there, but on the other side, I think the healthcare companies, a Merck, that they offset the cliff that they were going to have with patent expirations by buying Schering-Plough. You're going to get a 4.5% dividend while you wait in an 8 to 10% market. If you can pick up half of that in dividends, and even Obama is going to let you keep 85% of it for the next 2 years,
right.
That's a strong return, and people are going to to that.
Google's really come down this year, hasn't it?
Well put. Unfortunately, we've got to get out. Thank you very much, gentlemen. The Dow is still up 90.5 points. When we come back, the Arizona wildfire